just so that it's not, too crazy. Okay, so I just sent that to you, Laurence, and then Ron, let me send you the same link just that you have it if you want to reference it. Awesome. Are you guys want to get started? Should we let everybody in?
Let's do it.
Let's do it. All righty. Everybody. All right. Awesome. Thank you guys for joining. If everyone can just, if they don't mind, muting as they come in, and then turn off the video just for audio quality and all that jazz. It's much appreciated. Awesome. So Tahir, you want to kick us off?
All right, welcome. So this is Mo Better Business. We're joined by some illustrious guests, and today's presentation is on Black angel investors and how to actually raise your first round. We're going to get into what it takes as a Black entrepreneur to actually secure the capital you need to build that business out and expand it. So in terms of format, we're going to talk in terms of some generalities as far as the space, the VC space. We'll talk about any questions that you might have, drop them in the chat, and we'll answer those at the end. And we'll get into some specifics about how to actually secure the deal from some gentlemen who actually have the goods and the information, and some interesting insights to share with us. So my co-host for today is Garreth-d. And Gareth is a software engineer based out of New York City. My name is Tahir Jones. I'm an entrepreneur and an IT consultant out of Silicon Valley. So I'll let Gareth get into the next stage.
Yeah, definitely. So before we go into a bit of the kind of what we're going to talk about today, just a little bit of housekeeping. If you guys want to take a look at mob.co, that's Mo Better Business, Mob. You can sign up, and we have 2-minute insights on Black fundraising twice a week. It's a newsletter where we just share some really good kind of unspoken insights that we've learned and heard from VCs and Black entrepreneurs who've gotten funded, as well as Homecoming Ventures and their Homecoming Angel Network. You can check out their link. It's in the chat, homecoming.ventures. So yeah, we'd love for you guys to sign up for those services or for those newsletters and followings. And with that said, we'd love to get into a little bit about our guests today. So we have Laurence Latimer here with us and Ron J. Williams. So Laurence is an entrepreneur and investor. He's co-founded and led a successful angel investment group that's deployed over $8 million across 25 deals since 2018. He also works with Techstars and Princeton as a mentor, and is a fellow of the 2019 class of the Aspen Institute Finance Leaders Fellowship. So thank you, Laurence, for joining us.
Well, thanks for having me.
Awesome. Then we also have Ron with us. He's an entrepreneur and an advisor and an innovation leader. He currently heads up strategy for Citi Ventures D10X, the Global Consumer Bank Incubation Program, as well as he was named one of Fast Company's 100 most creative people in the business. Thank you, Ron, for joining us as well.
Great to be here. Thanks for having us.
Awesome. So yeah, today we're going to kind of get into the topics that we talked about of Black angel investing, Black entrepreneurship. But why don't we start with kind of you guys giving us a little bit of your background? I know we did a very high level, but I'd love to hear more. What got you in the space? How did you kind of find your way into the market?
Yeah, and I'm happy to start. So I've, so it's like I got backed into tech and really into startups. But I've been doing it now for about 20 years. When I came out of school, I went to graduate school at Princeton. It's one of the affiliations that I have. I went to work at McKinsey & Company, and I was there. Very quickly realized that I like making widgets as opposed to helping people make widgets. And so when I left, spent a few years there, left there and went into a series of early stage startups. The one that really was most exciting for me at the earliest stages, MLT, which is Management Leadership for Tomorrow, which is actually a nonprofit that was just starting up. But Digicel USA, which was a telco, with some former McKinsey buddies. We hired in a bunch of other folks. We're partnered with Dennis O'Brien, who had founded Digicel in the Caribbean, and we're building a mobile network here in the US. And that was the first time I came on so early. Was first or second employee. And it was just fun. You know, you wear a bunch of hats, I got thrown into a bunch of situations that I had no business leading, and you just figure it out. And I just fell in love with that early stage style of doing business and taking an idea, turning it into a product or service, and then helping to scale that. And so spent a career just trying to find more opportunities to do that. And so I did some detours through some big companies along the way, but essentially it's really been that. And on the investor side, once you start trying to raise money and once you start, figuring out how you're going to use it, at some point you decide you've got enough skill and enough background, enough perspective that you can make some really smart decisions on the investment side and also help others avoid some of the same mistakes that you made. And so I did some of that work at big companies when I was doing corp dev, M&A at SunGard. My role at a company called IAX, which is a startup stock exchange, was head of ventures. And so I'd done that professionally for a while. I decided it was time to do that a little more seriously on the personal side. So help co-found Princeton Alumni Angels, which is the group that you mentioned. We've deployed about $8 million across 25, almost 30 deals over the last 3 years. And I've been doing investing in other personal capacities along the way as well. So for me, it's always just been about, that growth, like taking an idea, turning it into a product or service, and then scaling that. Yeah,
that's amazing. Can you tell us a little bit more? Obviously, the Princeton Angels network, that sounds super interesting. Can you tell us, I guess, what did you learn in that space that was unique?
Yeah. So some things that are relevant to the conversation we're having today, some others. So my background has been mostly in B2B financial services, fintech, and really with a deep spike on capital markets. And so working in a group like that has really helped me broaden my perspective on what's really relevant across industries, across customer types, and to some degree, even across geographies. We looked at some international deals as well. And that interplay and the depth of experience you get across the group. There are about 2,000 people on kind of the broader mailing list. We've had, over 2,000 people come to the different events. We've had, almost 300 accredited investors. So we've got this really deep reservoir of expertise across a range of industries. And I just learn a ton by listening to the questions that others have that have expertise in areas that I don't. So that's one thing that's been really great for me personally. I think on the investing side, it's given me a lot of volume, right? So we review around 400 pitches a year, decks a year, and we'll review probably around 50 to 60, actually more than that. It's almost 100 video pitches a year. And so it just gives you reps, and those reps, there's nothing like that. Just giving you reps to see how people are prepared. What are the types of questions that you can ask? What are some of the common themes that you see for those that are more successful, startups and founders who are more successful and less? And that's helped me immensely, both on the operator side, so as a founder myself in different areas, but also on the investor side to just get smarter and up the curve a lot faster.
Awesome, amazing. So yeah, that stuff was super helpful for context. Ron, can you tell us a little bit more about yourself as well, kind of like how you got in the space? What's your origin story?
Yeah, so I think it's funny. Laurence and I always marvel at how many different ways we could have met. We are overlapped in so many different areas of our kind of histories and backstories. But I think now is definitely, it's been the time. But I too have been, at some point, you're old enough where your resume spills onto a couple of pages. I started actually ironically on Wall Street. So I came out of college, liberal arts education. I knew one thing, I just didn't know what that thing meant. I wanted to work in business. I figured the place to start was in investment banking. And true to form, I learned a ton about how to look at, analyze, break down businesses, understand kind of drivers, and sort of see them and kind of explode in the 3 space. I was specifically working on leverage finance deals, so a ton of media, telecom, not a bunch of tech, interestingly enough, because I wasn't working on the equities desk, right? This is to date myself, 98, 99, like that. And so, I remember the moment where I was reading about the appreciation of like PayPal stock, and like, I was like, man, this internet thing is going to be huge. Like, I'm old enough where like I had that thought, right? I've been online for years, but as an aspiring business person, not knowing what it meant, I remember that feeling. And I love to tell this part of the story. I remember thinking, as I was watching like, dog.com, or like all these kind of like these now stories, right? Of like, you can buy a domain name, but still not have a business and fail, even if you raise millions of dollars. I remember the moment where I was like, there's a chance I'm going to miss this internet thing. This idea that it was going to be fixed, it was going to be solved before I had a chance to kind of jump in. And not unlike something Laurence said, I knew that while I was getting good learning on Wall Street, I was mostly sitting on the sidelines, right, as an analyst, helping other businesses. And leverage finance is interesting because you're usually looking at businesses at an inflection point. They're either going to flame out, right, or kind of take that non-investment grade debt and kind of go find growth and do interesting stuff, kind of reborn. That's all great, but we weren't actually doing the building, right? And so I too wanted to kind of get out and build. So you kind of take those two ideas, not wanting to miss the internet and wanting to build. And I jumped in with both feet, followed a guy kind of I knew through network to go build against urban commerce and community. So very much ahead of its time, got another seminal lesson, which was you can be right and be early and still be wrong, essentially. And so we raised a little bit of money. We're not well capitalized. He was the main man. I was kind of there to learn and kind of build the infrastructure of like operations and finance. And we got picked up, kind of acqui-hired by a traditional private equity backed Black media company called Vanguard Media, Honey, Heart and Soul, some kind of classic titles. But I kind of came out of that experience realizing that it's not enough to have a good idea, right? And it's not enough to, kind of be on the internet, as silly as that sounds. And so I kind of, coming out of that experience, I spent the next couple of years consulting independently and ultimately built a non-tech business, right? I was kind of sort of felt my first kind of shivers of maybe after the internet kind of crashed, right? Kind of the market imploded, maybe I should build something more traditional. So I built a test prep and tutoring company. And so I went from learning about internet to, well, I'm just gonna go build a business with like molecules and atoms, and like built this really interesting and successful practice in the New York City market. And Scholastic noticed and sort of asked me to come in and do corp dev and strategy work there, which today I think we'd call, kind of innovation type work. And so bopped around in there, tried to get some stuff done, got to acquire some companies and spin out some companies, which was, again, kind of fleshed out, kind of an important part of my education of like valuing businesses and understanding the mechanics of why people buy stuff. And then got that itch again, right? Internet was booming. I was thinking about going to the West Coast. And, had I done that, my life would probably look very different. But right as I was literally thinking about like packing up and moving out West to go where the internet really gets built, I kind of looked around and realized I was connected to folks who were building big in New York City. And this is 2007, 8, like things were really beginning to jump off in New York City as an actual kind of center, the kind of, double click mafia, like all those kind of centers of East Coast tech excellence. And so just to kind of jump forward really quickly, basically a year later, wasn't sure what I was going to do, kind of took a year off to kind of, decide what to try to build, didn't have a real target. I convinced a stranger on Craigslist to rent me a motorcycle, as bizarre as that sounds, to impress a girl, my girlfriend at the time. Transaction was amazing, paid this guy $250 instead of buying a motorcycle, impressed the girl, married her, have 2 kids with her now. And by the way, not a scalable way to do that to date. But most importantly, that gave me the seed idea for Snapgoods, which was, we were kind of early entrants, kind of pioneers in the sharing economy space. And so that then was my first time like raised a couple $1 million around that. Kind of moved forward from there, had a bunch of success that got me on some magazine covers and in some articles that my mom could take to church, but wasn't fixated enough on the kind of customer journey. And so the most important lesson, the way that I wound up kind of investing, ultimately advising, was, again, good idea, could tell the story in the sort of boardroom, but kind of get people to give me money, wasn't focused on product market fit. And so whereas I have business experience in kind of B2B space enterprise, my kind of consumer, my tech startup focus primarily has been consumer facing until I began advising. Company flames out, I sell it back to one of my investors. I thought I was never going to work in technology again. And 3 or 4 different peers showed up and were like, we would love your help with stuff. And I didn't even know what that meant. But effectively they were like, you know what not to do, right? You know how to actually get to product market fit because you didn't do it, kind of deal. And so that started my practice around product strategy and growth. And then City Ventures came and asked if I wanted to help here at City Ventures. And along the way, I realized helping entrepreneurs find that fit and kind of keep that focus on customer is really kind of my superpower. And so as I saw enough of those to the point about reps, it has made sense to kind of really start to dip my toe and now a whole foot into investing more actively. So
amazing. Yeah. So you've had there's like different chapters of that story.
Yeah.
I just want to kind of go back to something you mentioned. You said about snap goods. You mentioned in 2008 or around that time, I think that was when you were raising. Is that correct? 2009?
Yeah, that's exactly right. 2010. Yep.
What was it? Obviously, at that time, right? It's like you're going to these meetings where people are surprised to have a Black founder. Excuse me, sorry. But what was that experience like? Of basically, you're walking into these rooms where it's a surprise in itself. Of like, it's a very novel thing for these people. What was that like in 2009 around that period? And kind of what are you seeing different now?
So we definitely couldn't have beards back then. So I'm happy that that's changed. I think, you raise a really important question, Gareth, right? That I think we all know the reality of the answer I'm going to give, which is, despite the fact that I'm on paper well-educated, despite the fact that I can complete most of my sentences, despite the fact that I knew more about technology than some of the people I was talking to, there was always that moment of having to signal affirmatively that I deserved to be in that room. There wasn't a lot of this, right? There weren't a lot of networks. If you think about the amount of capital that now has gone to Black women, specifically women in general, just in the past year, Black people in general in the past year, the change in capital allocated to supporting diverse founders, the world was this big. I mean, there's, you knew the few Black angel investors or you didn't, right? And so dramatically different. And I think in some ways, I carried that, right? Like I didn't so much raise $2 million as I did raise $50,000 40 times, it felt like, right? Like, but like I was always kind of like seeking out. I didn't do here's an idea, back of the napkin. And so it was just like, dude, here's $5 million. I didn't get the 7 years of grace that like a Dennis did, Dennis of Foursquare, who's awesome, super smart. That dude raised $88 million, 7 years into what was a very successful and then sideways and then dwindling business. $88 million of venture debt after already raising, somebody check my math, tens of millions of dollars, already in equity. And so I didn't have that benefit. The good news is I was able to leverage network, like stand on the shoulders of folks who kind of have my back. And I think that in some ways is what we're trying to replicate is there's an element here of if one of us has a foot in the door, if two of us have feet in the door, we are working hard to wedge that thing open, right? And so I think that's where there's a self-awareness and a sentience, I think, to this moment that we're having, all of us. We're having this call because of that, right? We're aware that it wasn't fair and we're trying to make it more fair, right? Or at least do it ourselves kind of collectively. So
I actually want to add one more thing on that too, just to bring this point home. In 2009, 2007, 2008, 2009, we obviously living through the housing crisis, and in New York, we had this kind of this financial crisis. But we didn't have, the networks that Ron described couldn't have existed back then because they were very school-based, so affinity group-based, so your school, your fraternity, others, or geography-based. You knew people in New York or in Atlanta or here. And one of the things to me that's been a real sort of driver is just social media, for all the negatives that are about it, but it's really removed geography as an impediment to expanding people's networks. And many other things that it's done as positive, obviously a lot negative as well. But that's one for me. Like I talk to people regularly now and interact with people regularly from far more places today than I did 10 years ago. So in some ways, I find that social media is able to like scale your networks and scale your opportunities in a way that was just impossible to do even 10, 11, 15 years ago now.
It's also, I think that's a good point, Laurence. I'll just add one thing to that. To the social media point specifically, it's brought down the barrier, right? The sort of, what did it look like before to get on Laurence Latimer's calendar, 15 years ago? Maybe it was easier 15 years ago, but it might've been harder, right? If you were where you are now, 15 years ago, for a person to get that introduction, get a coffee, right? Like if that was sort of threshold, that's a lot. And so that has also changed. The accessibility portion is much higher.
Actually get into that a little bit because you mentioned the accessibility piece, and there's the prevailing wisdom would be that you need a warm introduction, right? Or something tantamount to a warm introduction. If an entrepreneur was to pitch to you out of the blue, first, should they do that? And how should they position themselves to have the best likelihood of success?
You want to jump in, Laurence?
Sure. Well, so, the first thing you mentioned is referrals are still important. And, there's, for better or for worse, you try to, in some ways triage through your life, but you try to prioritize in meaningful ways. And when I get a referral from someone that I know and that I trust, that's immediately going to the top of the queue. And that's, for better or for worse, that's just the way it is, right? I think, as we just described, our networks are bigger and broader. And so that as serving as a gate has actually in many ways gone down relative to what it was 10 or 15 years ago, but still certainly an important cue for me to say, all right, I need to put this at the top of the list. If I just get like a blanket cold email, that is definitely going to be lower on the priority list of all the things that have to get done. But kind of getting back to the question, like, how do you position yourself? So first and foremost, I'd say just like one of the things that is most frustrating, just puts friction in the process, is immediately like, I need money, and just going into I need money right now, without actually investing in helping me understand the business, why you're in this, what the problem is, and sort of others, and like leading with I need money. The old adage, when you want money, ask for advice. Like, I actually think that's pretty darn true, right? Ask for advice, expect advice. If you come in asking for money, like my investor hat immediately goes on, and I'm much less open to serendipity and open to just like engaging in a way that is conducive to building relationships. Because now it's become a transaction.
Yeah.
Right? This is very much like dating. And so you just want to, I would say, position yourself for success. Just start with asking for advice. Hey, I've got, an interesting idea, or I've got a startup, it's got some traction. I'm having these kinds of challenges. Here's the kind of aspirations that I have. I'd love to get your insider advice on these sets of challenges.
Yeah.
And like, that's a conversation I have all the time. I spend probably more hours a week than I probably should doing that. I spend many less hours on people who just immediately like, hey, I'm looking for money on this. Can I talk to you?
Yeah.
So I think that's I think really important. And the one thing, one other piece I just want to add into that is just be open to feedback, and especially difficult feedback. When you're at the earliest stages, particularly for first-time founders, it's like you're going to get 90% of it wrong, and that's actually okay. It's expected. That's entirely what should be happening. But if you're not prepared to receive the feedback, like, oh, this thing that you think is so cute and your baby is, and like for somebody basically to tell you your baby's really ugly, if you're not prepared to hear that and like be open to that and really understand that, it can also be really difficult conversations to have, particularly early on.
Yeah, just to throw down for a sec, I think, I literally built as a part of Snapgoods, warm intros are the dopest, no question, right? It's always a filter. I think there's an intentionality in this moment. I'll say that I think almost requires us to, I say yes. I never used to be kind of a profligate LinkedIn, everybody can connect to me. Don't tell anybody, right? Nobody's recording this, right? If you were Black, right? Brown, female, Black, brown, like I'm gonna say, sure, right? Like you can at least, we can start there, right? I think that's important as we all kind of go out and try to find ways to help. I think to your point though, Laurence, like that additional due diligence of like, how do I know you, right? Like authentically, like if we got to make decisions quickly, or if I got to introduce you to other people in my network, who's going to vouch, right? Those ideas of like, how are we connected? Super important, maybe not necessary. The one thing I'll say is this is a math problem in part. So while it is like dating, it is much more like an open relationship, right? Or what I hear that they're like, in the sense that I might not be the right person for money, but I might be the person who's super connected to the leading authority on like authentication, or like media authentication, or banking, or legal, or whatever, right? The part about being a networked person that is sometimes valuable to a startup, to a relationship, to another network is I can route you to the right people. And to Laurence's point, coming in hot with like, do you want to write a check is definitely not the right place, I think, to start. Because like dating, open relationship or not, I want to understand what you need, right? Like what do you need and can I help? The point that he made, I'm going to circle it, underline it, and bold it, of taking advice and feedback. There is this set of founders, and I want them to win so hard, y'all. And we've now had 3 conversations, and I've had to put them on the restricted list because the one thing I've got is a dad, a husband, I've got 2 small kids and a dog. Time, and I got a full-time job. We're doing this other stuff out here. Time is not the thing that I have a lot of. And so if I give you the feedback with compassion, right? Like I'm here to help, I want to see you win, and you do not implement, First time, second time, third time, if I'm still asking for basic stuff like, and we'll talk more about like what does good look like, whatever, I'm out. Like not beef out, right? I'm just like, I can't allocate more time to you. So that part is like, might be cold. I might not be the person that has a ton of cash for you today, but I'm still going to try to help. So make it easy for me to help. Also show up with specific asks. Make it easy for me to help. Is not a big
Yeah,
deal.
I think that point that you just said about specific asks, like, honestly, I've made that mistake before when I'm talking to kind of VCs in the space or angel investors. You have to kind of balance, I think, to what you said of like, it is, you're trying to learn from them. You're trying to make sure that, you're teachable, but don't waste their time without an ask, I think, of some sort, right? If they get to the point where they're like, okay, so what is it that you're here for? What is it that you want? If you don't have a very pointed ask, I think it's one of the signals that basically you're a first-time founder or you're not quite ready for the kind of the fundraising process. So.
Also, increasingly, I just add this sort of small point, because back to the social media and just general kind of social web we live in, kind of world. Your interests are out there largely, right? You were posting about, tweeting about, sharing, commenting on the kinds of things, and if not that, you might also be explicitly signaling the kinds of things that you're interested in and can help with as an advisor, investor, et cetera. You got to do that homework, right? Of kind of showing up and being like, hey, Laurence, look, I saw that you're into life sciences. Like, that's amazing. Like, tell me more about that because my startup is in X, Y, and Z. Do that homework, right? Like, again, make it easy for me to help. I want to help. Like, literally, that's my first question is, how can I help? Make it easy.
Amazing, yeah. Just a question that kind of fits into, because we're all talking about the ask, we're talking about kind of being teachable. I guess the next thing that kind of comes to me is like, you've had a great meeting, let's say with a founder. What's good follow-up in your mind, right? So one obvious thing you're saying is like, execute on the things that I've talked to you about that need to happen for your idea. But what does good follow-up in your opinion look like?
I'll jump on first really quickly, because I think I was just talking to one founder that I'm advising. Getting into a cadence that shows momentum, right? So unpacking that for a second. I think I've seen founders that have an easier time raising are the ones who recognize that you're raising for months before you're then raising for months, right? Which is to say, if we talk and you hear from me, I'm interested, I really want to help, then put me on that investor and advisor and just general friendlies update email. You might send it out once every 2 weeks, once a month, whatever that cadence is. Stick to the cadence, make it regular, and show some of the hair and some of the warts and some of the things that aren't going right, but also show some progress. Right? You're out there kind of grinding and doing your thing. That is, to me, the most effective way to consistently kill a bunch of birds kind of with one stone, because you're keeping people close and you have an ask in every single one of those things. And there's good examples out there that happy to share kind of afterwards, but like, that is a really important tool.
Yeah,
it's really good. Yeah.
Yeah, and I co-sign on all that, and I would also add that in follow-on converse, like to me, follow-up also implies that you do what you say you're going to do. So if you're like, hey, we just agreed to these 3 things, then you come back. It might be a week, it might be 2 weeks, it might be a month, but just something that again shows that you listened, you acted on something that you committed to act on. And you've followed through, you've closed the loop. So you're demonstrating through actions that you're the type of person that I can count on, that is going to deliver the things that they said they were going to deliver. So it's both good for the personal relationship, but then as a signal for the type of leader that you are and the type of person that the type of leader for your own business, just sets a really good good example.
Definitely.
And then just to be clear, like Rod said, follow-up doesn't have to be tomorrow or next week, but like it also shouldn't, I would say it also shouldn't be 6 months, right? Because I've just forgotten about you by that point. So something that's reasonable and relevant to the conversation you're having.
Oh, and I'm going to steal this from Arlen. The one thing not to do is to forget that, like, as excited as I am about your thing, as much as I want to help, please don't show up angry. I mean, she's shared screenshots of like DMs of folks shouting her down for like not getting back to them. Like, you got to remember, I know it's tough. It's that matrix of like urgent versus important. I really want to help. It's almost never a thing, for most cases, and Cal, check me on the math here, but I think it's never personal. There just might be lag on getting back, but like, let's keep it
keep it
civil and warm. Yeah, exactly.
Yeah. I kind of want to,
Oh,
go ahead, Tier. No, go ahead.
I was just wondering, are there any other things that you see, like recurring mistakes that you see that kind of take people out of the running or demonstrate that they're not ready off the bat?
So I am a stickler for, and this is true in the context of like my day job, when I'm working with entrepreneurs and residents who are like helping business leaders inside the business. If you, as a starting place, are like super sold on the solution, the feature set, like you're knee deep in like it's going to be the dopest tech, it's going to be location based, it's going to read your brain, it's on the blockchain, like you're focused on that. And I'm like, cool. Who has that problem today? Exactly. How do they articulate the problem in their own words, and how do they solve it today without your amazing sounding futuristic solution? And you can't answer those questions. Again, everybody, through the lens of my own lived multitude of mistakes on this front, not demonstrating to me a sufficient understanding of your market, your kind of initial key customers, and what their real needs are. That is always the place, one, where I'll coach you up, and I'm happy to talk about it. It's not like a can't believe you don't know it. It's if that's a major blind spot you don't recognize, as Laurence also said, you're going to probably get most of it wrong. That's the dirty open secret, right? We're all going to get some of this wrong if you don't demonstrate real attentiveness to that kind of detail around customer, product to market. Then I worry. So that's probably my first big one.
Yeah, and I'll co-sign 100% on that. I would probably generalize that you're just being prepared for the conversation you're having. And so you've got to demonstrate that you understand things in a sequential fashion in many ways, right? So somebody who comes to me and like understands all about VC, but doesn't really understand their market, like you've got that out of order, right? You like, great, you know how to raise and you've got the great relationship. If you can't tell me a great story about a problem and a solution, you're never going to get to the stage where folks are taking you seriously. So just that preparation of, and being really steeped in your problem, right? And whether or not you are, whether or not you're the technical lead or the business lead, whatever, if you're the founder of that company, a big part of your job is just telling the story. And so if you can't tell the story in a really compelling fashion and from a fact base, it's really, really tough to get beyond that.
Yeah. Yep. Can you share, so I think that kind of segues perfectly into the kind of the next kind of questions that we had was around, I guess, storytelling, right? So not everyone is going to be the most kind of loudest, most boisterous kind of personality, but you'll see plenty of founders who don't have that skill set and make it. Can you kind of speak to what do you mean by storytelling, and what can you do for the people who maybe aren't the most extroverted personality salesmen?
Yeah. So let me start on this one, because I've got a lot of conviction around this one. You don't have to be an extrovert or type A to be a good storyteller. But I think if you're going to be the founder and really the CEO of a business, part of your job is to tell the story, to set the vision, strategy, and just tell the story of your company, why it exists, why you're doing something that you're uniquely qualified to do, and that nobody else is going to do better than you. And it's your job to tell that to all the stakeholders, whether it's your employees, people you're recruiting, potential investors, current investors, board members, as well as out to the customer base. So I don't believe that there's any, you can outsource that at all. And so you don't, everybody has their own style. You don't have to come banging on a table. You don't have to scream. But in your own authentic style, you have to be the best storyteller about your business that you possibly can. And I think it's like I said, it's just one of the fundamental things that a CEO's got to do. So if you're not an outgoing person, don't try to be, be you. If you're someone that is not particularly emotive, then tell me more fact-based stories and layer in some interesting use cases. But you've got to be that chief storyteller.
I'm gonna 99% agree. I think the one thing I'll say is something you said, Laurence, I want to key off of is like self-awareness. If you are not naturally a good storyteller, just recognize that it's a necessary skill for your company. And so whether it means making sure you hire for that co-founder, that senior person, that person who can really get in your ear and influence, kind of how you show up to tell your story, it's necessary. There's no, for every 100 folks who, are like, I'm super talented, nobody gets my vision, but it'll still succeed. maybe one of those people, right, is so visionary and what they do is so revolutionary that somebody else picks up the thread and kind of helps them get over the line. For the rest of us, got to learn how to tell that story. And again, whether it's you or you have a person who kind of helps you, coaches you, co-tells it with you, you need to be able to, that is an essential asset.
And I actually, this is the 1% we disagree. I don't think you can outsource it. If you're the CEO of the company, if I'm an investor, I want to talk to you about it. And you may have people around you that are going to like add spice and like add some excitement to that story, but I'm investing in you. Unless I'm already decided you're not the person and I'm looking like I've already projected in my mind to get you out. But I do believe that this is, you can be coached. There's a lot that you can do to kind of augment, but in your own authentic voice, you've got to be the best, the chief, maybe not even the best, but the chief storyteller for your business.
I think that's right. But I think sometimes for some kinds of companies, and again, I don't want to presume the mix here, but for folks who are building deeply technical products, I think the one difference that I'll point out is that that code base, their kind of skills of the command line, sometimes in certain instances can speak volumes to the likelihood of the business to succeed. I've seen this like enterprise context, like, you might need that CRO or that kind of, head of sales who can kind of ultimately sell the vision in the sales context, and that sort of co-founder who's a little slicker who can sell it kind of in the boardroom. But just bottom line, I think that what we agree on is like, you got to figure out how to get that story out.
Yeah.
I think, happy to talk to folks who feel like they're struggling with that, because I'm not sure that everybody will be comfortable telling it, but they need to be. So I hear you.
Absolutely. And I think that's something people would be surprised at, like how far they can come along as they're talking to more investors. Like your first pitch versus when you're 20 or 30 down the line, it's going to be drastically different. So it's like the fear that I can't do it in the beginning, it's through reps that kind of changes. So
it's also somewhat formulaic. I mean, that's the thing that people don't realize is like there is a pattern. There's a heavy degree of pattern matching that exists broadly. I used to be annoyed by the like for like, that analogy thing that kind of all investors wind up doing. I was like, man, I'm never gonna do that. I totally do that now. I'm like, oh, it's like Peloton for blank, whatever. The ability to help investors see how your business is a lot like some other businesses succeeded and the different ways in which it runs in parallel. That's there's a formula that lots of folks have published on that I think you can follow for sure.
And one other thing, I think this is also, as you described, it's iterative. So your story evolves. You get better at it, but that's also the coachability piece that we talked about right at the beginning, right? You got to be open to feedback, kind of listen attentively and actively, and then act on that.
Definitely. Tahir, do you want to jump in? Is there something in that kind of realm that interests you?
There are a number of things, but I'd be curious to know. So what are some things that an entrepreneur? Let's talk about some hacks. Let's talk about some of the things that you're not going to learn except through experimentation, repetitions, having gone through this process. Is there anything that we can share with our audience about effective ways to get to a yes? We've talked about a lot of things, but is there anything that they can do to make your job easier? We've sort of intimated at it, but you mentioned 400 pitches a year. The math starts to dictate that there's only so much time for these things, right? So I would imagine that's one. What are some other things that people can do to make your job of vetting all of these people that you're potentially speaking to, make your job easier?
Ron, I think, said it nicely. There's a formula here. And the more you fit into the formula that I'm used to consuming and sort of conforming to the story that I'm used to hearing at a meta level, the easier it is for me to get to that yes, the easier it is for me to sort of get to the next week. And it's kind of, it's like nothing that's rocket science. There's plenty of things out there, right? It's a super clear and crisp problem statement and what solution are you bringing? Why are you and the solution uniquely positioned to win? Give me some context about the market, maybe the sizing, what have you. A little bit about the competitive landscape. So I know you're thinking broadly about this piece. Who's on the team, right? And then if you are raising, like, give me some details. Like, at least you've thought through what this, if it's an angel round, if it's a pre-seed, seed, but you've thought through the dynamics of what that's going to look like. And so. And then, so what some potential exit opportunities are? That's, I'm an investor, right? I'm not giving you money so you can go build your business. I'm giving you money so I can make money. And so give me at least a little bit of flavor for what that could look like on the other side, even if it's total swag. Like that's kind of, for me, that's the story. And so I need to hear that story and all the chapters of that story. And I'm evaluating each chapter of that story. But if one is missing, it's immediately, it's tough for me to get to a yes until I can figure out what that chapter is. So for me, that's a very big part. It's just having that story together in a compelling fashion. And it's roughly those, maybe you pull out something, you pull in, but it's roughly that. I'd say the other piece is not being transactional. So investing in the relationship, like don't expect to get to yes in one conversation. Hey, if you can do that, it happens. You read about it when it happens. I had one conversation over coffee, and all of a sudden somebody wrote somebody a $50 million check. Awesome. That's not we know about those cases because they're so rare. So invest in the relationship. Understand that it's likely to be 2 or 3 conversations, even for the people that love what you're doing. Right.
Yeah.
And so I think that's another big one. Just that investment. As Ron said, like if you say you're going to take some feedback, you're going to do something, just go turn around and do it. That's giving me some more data that I'm processing to get to that yes. And then I think if there's a last piece is understanding the alignment between what you're looking for and the investors that you're talking to. There are many times where I'm like, hold it, somebody's talking to me, it's like, yeah, I'm raising money, this is that. I've already got 3 million in, and I'm sure like a $4 million round at like a $20 million valuation. I'm like, whoa, time out, dude. I'm an angel investor. Even with the group that I'm from, we're not putting in money that's going to be meaningful in that way. So like, you're already past what this group can do for you. At least maybe there's some bigger angel groups that are going to write $1 million, $1.5 million checks, but you're past what we can do for you. So understand that alignment. The group, the Principal Alumni Angels, is one where we get about half of the companies that pitch to us that are life sciences, because we've got some really strong depth on the life sciences side amongst the executive team, as well as amongst the larger group. And so we get tons of life sciences companies. We're starting to get more in the clean tech. We've had some that have been space related. We don't have a ton of depth there, so it's just harder for us to engage. So understanding the alignment between who I'm talking to, how they invest, and what I'm looking for is a piece that can be researched. You can kind of get there pretty quickly, and it allows you to disqualify people as a startup, as a founder. Like, you got to manage your own time. It allows you to disqualify potential investors quickly, and then maybe they still some value there. Maybe they can connect you to somebody else, but at least that this is not going to be somebody I'm likely to raise money from.
Yeah. So big cosign on a bunch of that. The funny thing is there's a meta commentary here, which is like, Laurence and I can look at the same deck. We're going to look for slightly different things. And so that is also why that pattern piece is important. You kind of have to know who you're playing to, but you also have to have the fundamentals in so they can share that thing around. I like to call it the cocktail napkin, the cocktail sort of conversation test. Can somebody take your deck, take your story, walk it up the block to their partner, and retell it in a way that that will sort of maybe compel them for different reasons.
Yeah.
But I think on my side,
Yeah, someone's having an audio
Anybody
issue.
wouldn't mind muting their audio?
I think on my side, the other thing I'm looking for is focus. And so I think, if I think about like pattern match, have focus, show me some evidence, I tend to myself focus on like, does this person understand the difference between a grand and ambitious vision? What I think of as like the horizon, right? Like, you're going to change the world, and I want you to have that ambition. But to walk across that water, what's the first lily pad you step on? Like, back to that notion of product market fit. Do they understand the first thing and next thing I have to do, right? Can they force rank and prioritize and sequence? Because big companies can't even do everything at once.
Mm-hmm. Yeah.
So startups definitely can't, right? And so when I think about what I'm listening for is like, yes, the vision. Is it a big market? Is it a growing market? Is it an underserved need, right? But then what part of it are you picking to start with, right? Don't tell me everything. Don't give me an answer that the market is everyone. Don't cobble together 3 different segments of it's firemen, clowns, and people that like, tacos. And like, that's a market. It's not a market, right? It's a self-referencing group of people, right? Who is that? And then evidence. And I saw in the chat, somebody talked about growth. Another person who talked about distinguishing about stage. Again, to that own self be true, like, know where you're at. Because the thing that I think folks don't say a lot is the minute you start talking about revenue, you call yourself a post-revenue company, you have just changed the conversation for a lot of investors. Tell me that you're running experiments. If you're still, seed stage, pre-seed, and you're trying to kind of get your feet wet, understanding the market and/or who will take your product and pay for it. Tell me that. You're one big experiment organized to find product market fit and then grow. Tell me that. Don't tell me, yep, we booked $5 revenue last week and we got 100% growth week over week, right? And then I talk to you 2 months from now and you're like, we got no revenue this week, like that, right? Like know where you're at.
Can you explain that a little bit more? Because I think I've talked to so many founders, and I think the part that they get tripped up on is when they start talking to investors about traction, which is just, it's a term that has so many different meanings to different investors. And it's almost like the founders try to kind of fit what their traction is into what the investor wants, right? So one investor might want revenue, another one wants signups, someone else wants page visits, whatever it is, right?
That's right.
They're no longer kind of following their own product roadmap. They've just decided these investors that seem very interested, they want to see this traction number. So let me focus on that. How would you approach the traction question?
That's a great question. I think it goes back to kind of know yourself, your story, like know what you're selling, and then represent the metrics of traction that will best support that story. In other words, if I'm coming into a heavily competitive market with mostly commoditized offerings, like everything's mostly the same, and I'm competing on price and some like novel delivery, tell me that you can acquire people, which by the way, may not require you to build anything. You can spin up a landing page and spend $100 or $200 or $500 on ads and get a sense for, do I understand something that other people in the market don't about how to acquire customers? Talk to me about cost to acquire customers, right? If you're building a brand, talk to me about activations, right? Talk to me about, we went out and like with one social account, like one, part-time person doing content, we built a 5,000 person following in only 2 months. There's real fire in the belly for this thing that we're doing. If you're an enterprise, talking about the fact that you pre-sold the product you haven't even built yet, because you were consulting. That's a kind of traditional playbook, right? Kind of enterprise space. You're delivering client services, and they're so hungry for a customized thing that's a version of you and your services. But they're like, yes, we'll sign you up to an X $100,000, $10,000 contract, and now I'm going to go build it. To thine own self be true. You got to know what your story is, and then the sort of traction, the evidence will support that. Another part of the sort of evidence is social proof, right? And so back to the warm introductions, or who do you know? Like we are social animals, right? Like I like the look of you, you seem cool, but like where are you from? Where your grandma stay, right? Like we need to understand where people come from, right? How did you get here on my doorstep? And so don't underestimate, even if you don't have the network, to Laurence's point, invest in building those relationships. It will take time in some cases, but it's worth it. We might meet today, and if I'm excited about what you're doing, even if I think you're early and premature, I'm still going to introduce you to 3 more people that I believe can help you on the basis of what you tell me, if you have a clear ask. That's the other part, is like, so as you're figuring out the actual traction, the actual metrics, your actual story, don't forget that social proof is another form of evidence that folks believe that you are worth investing in.
Yeah, I want to put one more spin on the traction and kind of how you demonstrate that. Ron talked about knowing your story. Another lens to put on that is that there are different types of traction based on stage, but also based on industry and based on specific markets that you're in. And while you don't necessarily have to have the exact same metrics as the next company is doing something similar, understanding the metrics that are important
in that market,
in that particular industry is important, right? Because if you come at me and you're, like doing some brand work, and it's going to be your customer acquisition is really the thing, and you start talking about, revenue metrics or something else that has nothing to do with it, I'm just like, whoa, total disconnect here. This person does not understand what's driving value in their business. It's not actually how much revenue you're getting. It's actually, what your customer acquisition costs. You can, the revenue doesn't, maybe in that particular industry, doesn't vary all that much. And so it's a pretty tight range. And so what does vary is how efficiently you can acquire customers. Whatever it is that's in your space, you've got to anchor there, and then you can play around in there for put your best foot forward. But just understand what's relevant for your industry, your market is important as well.
Mm-hmm. Just for the audience, if anyone wants to put a question, just feel free to put it in the chat. We'll try and get to at least 1 or 2 or 3 of those questions. But kind of just going off of what we talked about with traction, obviously, I think we always see the headlines, especially like white counterparts, where almost they have a product, they might not even have traction, and they raise some ridiculous round or some ridiculous amount of money, right? And obviously that's the exception, not the rule. But a lot of people are still trying to do that. Do you think the market has matured enough where for entrepreneurs like ourselves, you can go in with, let's say, MVP, but you don't have the traction? Let's say we're in the B2B or consumer space. Do you think it's realistic, or would you say focus on getting that traction first?
So let me try to jump in here, Ron. Yeah. So first, yeah. I'd say getting traction is always important, and it's all relative to where you are. So I actually don't think there's this sort of distinction or exclusivity between those two things, right? You still need to continue to get traction regardless of what you're doing or where you're at, and you need to go out, and if you're at a point where you're tapped out or what have you, need to go out and raise. I would say a couple of things though. That's kind of like bigger picture. You've got to, it is very difficult to raise in the best of times. Money is the cheapest it's ever been in like the history of man right now. There's more VC that's sort of going out across the broader range of markets than is ever going out. And yet it's still really difficult to raise money for 99.99% of us. And for people of color, it's 99.59 hard, or hard to go out and actually be successful raising money. So you need to show traction. Just showing up with a deck and an idea, unless you've done it 2 or 3 times before and have successful exits, that ain't gonna get you very far. Yeah. But there you can get creative in how you show that traction. Ron talked about, if you're in an industry where acquisition is really important, drop a landing page, tell a really good story, throw $100 against some digital advertising and see what happens. And then tell me that story. Or have some sort of, $5 conversion to get on a waiting list. And now all of a sudden you've now started to price, put a price on the thing that you've got there. Like, what does that look like? And so there are all different kinds of ways you can do pretty low fidelity proof of concepts, low fidelity tests that provide proof points to the story that you're at, even at its earliest stages. And I think it's super important to do that. I think the one other thing, just a bit orthogonal, is just knowing who you're going to. So if you're raising early, then go to investors who raise early. We don't, unfortunately, people of color don't have quite the friends and family kind of capital networks that broader, that are many in the broader community do. But there's still those networks out there. There are angel groups. Ron and I are working on Homecoming, which is a part of the mission, is to really catalyze Black angel investors and to help scale the capital and make it much more efficient for a founder and for an investor to find each other, Black founders and Black investors to find each other, right? So just like being thoughtful about who you're going to with the story you have will increases your chances of success to actually raise where you're at right now.
I just want to throw someone from the chat kind of had a very similar question to what you just said, Laurence. Brittany Davis just was saying, how should a founder kind of go about, where can they find more Black angel investors? I know you guys are working on an effort. Is there any other resources that you would point them towards for finding Black angel investors?
Yeah, I mean, so I think we're big believers in, I appreciate the tee up. We're big believers in, what we're trying to build here is better discovery and networking and kind of connecting of founders and funders, right? Like alliteration. And so we have not yet kicked off the newsletter, but I think what we imagine is sharing resources kind of freely. Like, we don't want to lock anybody in anything. We want you to find the right investors for you, your deal, your stage. In terms of, I don't know if there's a central location that we've come across, Laurence, that has really good like repo. I don't think we've seen that yet, so we might just wind up making it to answer that question, Brittany. But certainly, come this way. We will point you as we kind of pull this information together. We will be sharing it freely.
And so a couple of that, I just want to add on to that. So there are, listen, to be specific, there are Black angel groups, I wouldn't say all over, but we've been surprised at who's come out of the woodwork that we didn't know. Angel Capital Association, their last data that looks at the universe of active accredited investor angels in the US is around 400,000 or so, though. About 1.3 of them are Black, right? So you're talking about, 4,000 thereabouts, 5,000 active Black angel investors, at least according to the ACA. I believe that number is a little bit higher. I think there's some undercounting there, but that's the best data that we have. And like, that's not a lot of people.
No.
At the end of the day, that's not a lot of people. Even if you double that number, sort of 10,000, this is where we get to geography being a barrier, and the networks that you're part of being a barrier. So part of what we're trying to do is just to aggregate some of that, remove geography as a barrier. And to the extent that we can all syndicate our best deals across this network, reduce the friction of a founder getting in front of that incremental angel investor, it makes it more efficient for them to raise capital, which leaves them more time to run their business. It makes it better for, as an angel investor, I'm seeing a higher quality of deal, broader deal flow, hopefully a higher quality of deal, and investing in the best deals, regardless of where they are, and kind of, abstracting away from my own network. So it's a win for everybody. We can make this happen. I'm seeing some of these names pop up in the, even in the chat. I'm like, hadn't heard of that one. That's one I've heard, haven't heard of that one. And there really isn't any reason why we haven't heard of these, other than, there hasn't been that platform and that ability to just bring all this together. So that's what we're trying to do. And hopefully we'll have some success with that.
Amazing. The good news is, by the way, it's accelerating. The trend is, I can't stress enough how there are more today than there were yesterday, and there will be more tomorrow. And so it's a good look.
Well, just time.
Yeah,
there's actually one really good question. I think that if you guys could touch on it a bit, I think it would be interesting. And it's basically, the question is, what types of timelines in ROI do VCs, or specifically angel investors, right, early stage funding, what types of returns are they looking for, and in what period of time? Like, what's ideal? What's a perfect deal for you guys?
I'm going to jump in because I think I've got some conviction, Laurence, as you'd say, about this one. I think we are in many ways beholden to, for now, that's why I want to jump in this, the sort of traditional kind of dollars in time for, dollars out kind of time frame, right? So your typical VC would say, like, for early stage, it's, a fund is 7 years, let's say, right? And so, like, they're going to put that money and they may not see it for 7 to 10 years, right? Might be kind of an acceptable period. And as angel investors, we're there before them, right? So this money goes away for a while, right? So you kind of expect it to go away for 7 to 10 years, maybe more if it doesn't go well, and maybe forever. I think one of the things that you have to sort of be prepared for as you talk to angels is you got to be talking to folks who have a reasonable expectation that they may never see it again and are comfortable with that. I definitely took money from somebody once who had an exit. It was not Black for the purposes of this audience. It's actually a white person. Took money, and then when it didn't go well, he was like, "Man, I really could have used that money." And I was like, "That's not how you play this game. Like, you can't. That's not fair." So it really is. There's a longer timetable than you think. I think the typical multiples that funds, 90% of funds will go to 0, and so for that 10%, they're looking for 10x to kind of get to an average return of 5x. Want to check my math?
Roughly, yeah.
Roughly? No, but I mean, right? Like, at the end of the day, like you don't get to stay in business and do your 3rd, 4th, 5th fund as a venture capitalist unless you kind of see that kind of 5x type return across the fund. And the math just doesn't support that coming from all the investments. So it's from a small percentage. So, yeah.
Yeah.
So, and if I could, I know we're at time, a couple of things. So I'm seeing some of the names pop up of, like, other Black angel groups or early stage funding. And I'm joking, all but one we've all heard of, because we've all heard of it. And Ron and I have been working on just building out a database of some that aren't nearly as competitive, but, like, this is exactly what we look. So I appreciate you guys putting those in there. And we're certainly keeping track of that. And there should be more notoriety and more awareness of some of these other angel groups that are out there that are doing incredible work, just aren't getting necessarily the attention, which means to me, it indicates to me they aren't necessarily seeing the best deals, because if the folks in this audience haven't heard of them, that they're not getting they're not getting enough people who are ringing the doorbell saying, "I've got the next great idea." And then, just in terms of that time frame, I've signed up for everything that Ron just said. It's a long haul. And if you expect anything to come back before 10 years, you shouldn't be doing this.
Yeah, I think that the asterisk that I put, the part that I get passionate about over kind of, beers or coffee is, I think there's an alternative model in the future. I think we kind of have to play the rules we have to play the game with the rules that we kind of have today. But I think if you look at things like Clearbanc, CLEARBANC, there are folks coming to market. Actually, I want to say Collab Fund has come up with like a profit sharing mechanism. These mechanisms exist to dilute founders less and have good outcomes for all at smaller exits. The problem with venture capital funds, and everybody should know this, the math sucks, right? For most founders. And the statistics are something like 80% of founders would have done financially better had they sold. For the ones that get to like a series C, D, E, they would have done better had they sold before their series B. Just in terms of like, if it was going pretty well, there's a point at which you have to get so big to exit that from a stress adjusted perspective and everything else, you've actually, and like actual financial outcomes, you might've done better at your series A, series B. So just keeping in mind, like there might be a future in which you can access capital, and somewhere way up in the chat, I'd seen kind of I'd like to know about what's the right funding for me. There are alternatives. I'm not trying to talk us out of deals here, but understand that like all those tools together might make it more equitable for us to build collectively and not require unicorn status for us to have decent returns that kind of change our community's outcomes.
Amazing. Just the last thing, I'll just throw in one more question from the chat. Someone asked, have you guys ever thought of doing an urban spin on Shark Tank? I figured I'll throw that to you, Ron.
You can take that one.
Oh man, I mean, no, I mean, I think this is it's an interesting concept. I do think there's something to like looking at. I think in my kind of view, we're not just looking for Black or brown founders, female founders, gay founders, like differently abled founders. I'm looking for diverse perspectives and lived experience because you uniquely see your life and the problems that you've encountered in your life in a way that like I might not even, right, as like a cisgendered dude, right? I might have missed a lot of stuff you might as a woman. So I think there's a massive opportunity to kind of refocus and recenter on people that have not been the design targets of the mainstream for forever in this country and in the world. And there could be a show around that. I don't know that this would be the time to start that show, but I would like to see that show for sure.
Amazing, amazing. Well, thank you guys so much, for joining us, Ron and Laurence. It's amazing insights that you guys have shared. This will be available for people who only had a chance to watch some of it. As we said, you can check out their stuff at homecoming.ventures. I'm sure they would love to kind of hear from people who, entrepreneurs and angel investors who are in the space, and they'll be coming out with more stuff as the year goes by, as well as on mob.co. You can check out some of our material. Is there anything else you guys wanted to say before we, head out?
I'll do the penultimate. So just wanted to thank you guys, everybody in the audience as well. The questions and comments have been really good to get through, and it's always nice to kind of be in the family and have this kind of discussion. I do it. Many of us do it a lot, and so it's nice to be amongst this group of people in particular.
Yeah, ditto. I'll just say, do feel free to reach out. I know that we're both on the socials, and definitely here to help. So best of luck to everybody, whatever you're working on.
Thank you so much.
And
thanks y'all for having us.
To the audience as well. The audience was lovely with really constructive comments and no nonsense, which is beautiful. So thank you again. And thank you, Laurence and Ron, for joining us.
Thank y'all for having us.
Have a good evening,
guys.
All right. Take care.
Take care, everyone. Bye-bye.